Hey guys, it's Jason DeLong with Heartland Homes KC. Hope you're having a great day. Today I have the pleasure of speaking with Amy Prater with Bank Midwest, and she is here to talk condo loans, which right now the condo market is booming. It's springtime and people are out and about. So I want to introduce and welcome Amy and have her talk a little bit about what she is so good at.
Good morning. Thanks for having me up
bet.
here. Jason is right. The condo market right now is absolutely booming, and it really has been for probably the past 2 or 3 years. And condo lending is definitely a different animal than a regular single-family residence type of property.
Yep.
Very much so. A lot of what people don't understand what makes it different than a regular single-family residence is that when you're part of the paperwork that a lender has to get is what's called a condo questionnaire. It's a 5-page like Q&A, and it is designed specifically for Fannie Mae and Freddie Mac. And there's a series of questions, but really 7 of them are going to determine whether or not it's a warrantable property or not. Mm-hmm. And when we say the word warrantable, that means it's something that Fannie Mae and Freddie Mac will insure once it's been picked up from your long-term servicing company like Wells Fargo or Citi or AmeriHome or something like that. And
that's a big deal. That's one thing that people kind of either don't know about or take lightly, and that could make or break the whole deal.
Correct. I would say I probably do maybe 50 or 60 condo loans a year, and I would say 95% of my condo loans end up being non-warrantable.
Yeah, I didn't know that.
So for one reason or another, it did not adhere to Fannie Mae and Freddie Mac guidelines. One of them is if it's the developer that still owns more than 20% of the units, which is a lot of the buildings downtown. If the developer has not yet turned over control of the HOA, what their reserves are. So they have a budget, and then they have to have 10% of their budget held back in reserve, and that's the one that always surprises everybody.
Yeah.
That's the one that sneaks up. I actually am working on a loan right now in a community that I've never worked in before, and now that we've got the condo questionnaire and the appraisal back, and we're talking a little bit more with the HOA now that it's kind of gone this far, I think it's probably going to end up being non-warrantable because they don't have the reserves, because they had a big expenditure on the property a few months ago. They had to pay out a lot of money for something, and they have not had their annual budget meeting to talk about the shortfall that paying for that large expenditure cost and how they're going to make up for that shortfall. So right now they don't have that in reserves, and so I'm thinking it's going to have to go non-warrantable.
So is that something to do like a special assessment on? Mm-hmm. Typically, yeah.
Yeah, and they'll raise the HOA dues.
Yep.
Right.
Yep.
Or they can have the homeowners pay a one-time payment of X, so their HOA dues don't go up. So if a property comes back non-warrantable, we cannot transfer it out for servicing to a third party because it cannot be insured by Fannie Mae or Freddie Mac. So what we will do is we will portfolio the loan. And what I mean when I say that is Bank Midwest is your long-term lender. We will always service your loan. You will always have me as your customer service representative for as long as you live in the property.
Yeah.
So
you guys do a lot of that.
A lot.
Yeah. Yeah.
I would honestly say, I would say last year, I probably took in 25 condo loans from other mortgage lenders that had gotten 95% of the way through the process. And once the appraisal and the condo questionnaire came in and an underwriter looked at it, it was a decline by that other lender. But fortunately, my name is fairly well known in the condo lending community, so it's I've fielded a lot of phone calls.
Bring it to Amy.
Right. And that's always super stressful for everybody. I've become a very good shrink in the process of calming people down.
That's the business.
calming people
yeah.
down and closing it, and at least we have an avenue for them, because if they're, 7 or 8 days away from closing on their condo, they're super excited about it, and then the balloon bursts.
Yeah,
and,
they're gonna be homeless.
yeah.
Yeah.
Yep. So yeah, if a realtor has never done a condo purchase, they might not even know that there is that condo questionnaire, and that it could even not be approved by Fannie Mae and Freddie Mac.
Yeah.
If they've done 10 condo transactions in the last 2 years, they still might not even be aware that Fannie Mae and Freddie Mac can not insure it. It's always, this was the first time this has ever happened to me. I didn't know this could happen.
Oh yeah, yeah. I know the first condo I ever wrote for a buyer, like I had no idea what that was. Like,
Yeah.
no idea about the whole process. I thought it was just like a single family home, and so far
It's different. It's
from
a
the
lot
truth.
more paperwork.
It is different animal, but no, I mean, I just learned stuff. It's been a while since I've done a condo loan, because we don't do a whole lot of them up here,
Right.
and but yeah, that's good stuff.